Joining us now, Joel Shulman, Jack Howe is with us, Susan Lee, and Ashley Webster. We have to start with the oil price spike after the Saudi drone attack. And Joel, are today's moves just a one-day blip, or is this long-term?
Well, I think we'll see a blip through this week, although it's interesting. We've got a 5-month oversupply in oil, according to at least some analysts at J.P. Morgan, which is going to, shoulder some of the burden. I think also we're going to see other producers, particularly in Iraq and other major groups, step up their production to help offset the supply. But I think this week we're looking at Fed announcements and also the China trade deal, which may offset some of the effects in the market.
And, long term, unless we have some Green New Deal that comes in and kills off fossil fuel, we have a lot more oil and gas in this country. The same is true in Canada. We think of all the oil that Venezuela has that they've been waiting to go online, all of the oil that the Iranians have that could eventually go online. I think eventually traders think that this thing is going to settle down. Joel?
Yeah, well, so I think what it speaks to, though, is a larger issue in terms of what's going to happen with geopolitical risk, with potentially conflict with Iran, and also to the extent that smart drones now can invade almost any place, anytime, anywhere. I think is a larger issue. So the fact that the market's only down 40 to 60 bips, I think doesn't reflect the broader issues and the bigger concerns besides just the jump in oil prices.
I think weighting also has an impact as well, given that oil prices have been down so much the last few years. The weighting on the S&P in terms of oil companies is only around 10%, so it doesn't have that big of an impact as it maybe used to have when ExxonMobil was a lot bigger.
And Jack, you look at the oil drillers. I mean, they're not too unhappy about the price of oil going up a little bit right now. Some of those drills that have been dry may reopen.
Yeah, I think so. This is, there's, as you say, tremendous resilience like there hasn't been in the past in the energy sector today. And look, we're looking at a down market right now, but the bias for this market is higher. Stocks remain a great deal relative to anything else in the financial universe right now, certainly relative to bonds. So you could see this market up by the end of the day today, actually.
And doesn't the Trump deal, or the possibility of even an interim Trump China deal, really kind of trump the whole notion of what's happening overseas with oil?
Yeah, I think that would certainly give the market a leg up. If you saw some kind of deal, I think the people are, they see talks continuing, and they like that. They don't want to see a total breakdown where both sides walk away and this thing is hanging over our heads until after the election next year. So where things are right now, if you saw a deal, I think you get a bit of a boost in the market.
I think, look, this comes at a terrible time for a lot of economies around the world. China, India, the fact that they may have to pay more for their oil over an extended period of time could just have another really negative impact, of course, on their economy. The U.S. is a different story. The economy's humming along. We have a lot of our own resources that we can start ramping up. So from a global perspective, I think this is a lot bigger for the rest of the world. And of course, it all depends on how big a problem this is and how quickly it can be solved.
I think
for the Saudis.
the rotation of money into mutual funds and ETFs was over $14.5 billion last week. That is the biggest inflow since March 2018. So that shows you that investors are willing to bite once again, especially as we have an impending interest rate cut in the next 10 days. And it's the small companies. Small companies have outperformed the major indices by the most since 2016 over the past week. Right, Joel?
Yeah. So to that point, Susan, I mean, we looked at small caps, which haven't yet caught up to the last year's October 2018 highs. So they're about 14 or 15% off, whereas the Dow and the S&P are much closer.
Look at the big board, by the way. You guys have been talking up the market. It's still down, but down 64 points, 60 points right now on the Dow Jones Industrial Average. It was down triple digits. The other big story we are watching this morning, GM workers on strike. Christina Partsenevelos is at the GM plant in Arlington, Texas. Christina, what's the latest?
Well, this plant right here focuses on large-scale SUVs. You have over 4,000 workers that are striking here, and they are asking for fair wages. They don't want their health care costs to climb higher either. There's 4 idle plants that are set to close, according to the GM, so they want the demands from a lot of the union workers across this country is for those new new items to be added to those 4 factories. You have workers here, they're rotating in and out because there's 11 gates all around this massive, massive building. I've met people that have worked on door latches, alignment, drivers. There's even, oh, he's not here, but a retired worker too that has come out to help. And so they are pushing to get negotiations on board. You have that starting at 10 a.m. Eastern time, but GM has responded saying they've already invested $7 billion back into workers. They've given 5,400 extra jobs. So these negotiations are set to continue in Detroit. You're going to see possibly up to 49,000 people across the United States protesting, striking. We haven't seen a strike like this since the past 12 years. However, there's one man that was very optimistic. He was here during that last strike, and he said it was over in one shift. So overall, hopefully they don't have to be out here for long, because if they do, they would only get $250 U.S. per week, according to the union. Back to you guys.
All right, Christina, thank you very much. Joel, one thing that a lot of people are worrying about right now, a lot of folks who aren't experts in the auto industry, is whether or not we're going to have another situation where the companies are squeezed. The car companies have been losing sales recently, where the companies are squeezed exactly at the wrong time by the unions, whether this could lead to another bailout.
Well, when you look at GM, they've dropped from $152 billion from 3 years ago to about $130 billion in sales today. Their profits are down about $4 or $5 billion in that period of time, but they're still making about $8 billion per year. What's interesting is they've got $20 billion in cash, so they can withstand this for a while. What a lot of people don't know is in the last few years, GM has dropped from 225,000 employees to 175.
Yep.
So they've dropped 50,000 employees. We don't have the most recent data, but the 2 prior years we have it. And so, these 48,000 workers, you have to remember that this is a company that's dropped its margin from 13% to 10%. So they're down quite a bit in their gross margin. And the wages for GM is about $58 to $59 all-in cost per employee, compared to about almost half that, $38 for Volkswagen and BMW, and much less in Mexico. So this is a company which is trying to remain competitive. The $250 that was just mentioned in the story, that's about the cost per automobile, the excess cost that GM now pays. So it's about $250 extra. Right. Labor is only about 10 to 15% of the cost of the automobile. So it's not a significant cost.
By the way, a lot of people wondering why GM and not Ford. GM's profit margin is over 6%. Ford's is under 2%. So you go where the money is, and GM has the money, right?
Yeah, that's exactly it. With $20 billion in cash, people are looking at that. They're still seeing $8 billion in profits. They say they want a piece.
Well, 10% or close to that 10% margins, it was 6% for GM, is actually the highest among the big 3 in Detroit. And, according to the Center for Automotive Research, for every hour that workers are off the job, these car makers lose about $1.3 million. So if this extends longer than expected, obviously that's a hit for General Motors. But we haven't even brought up the fact that the DOJ is investigating corruption, by the way,
that's a great
amongst
point.
The UAW's top ranks. I mean,
you suspect this might be a diversion from that?
I don't know. I think there has to be some calls into question in terms of their motives, right?
At least the timing, it takes that story off the front page.
Especially when these workers are being paid quite well in comparison to other industries. We talked about $40 to $50 an hour, right? And that
$63 per hour is what I have, is that GM pays in wages and benefits.
Right.
It's all in.
Lumped in.
Yeah.
Right.
That's a good number.